Thank you. We will now begin the Q&A session. Participants are requested to switch on your video and unmute yourself at your turn. In the interest of time, request participants to ask a maximum of 2 questions. Varun, please introduce yourself and go ahead with your question. You can switch on your video and unmute yourself to proceed.
Hi, am I audible?
Yeah, Varun, you
Hello?
are. Yes. Yeah, Varun, go ahead.
Yeah, thank you. Theory, congratulations on a good set of numbers. I have a couple of questions. The first question being 2.3% reported quarter over quarter growth. Is it a little soft? Is it something of a worry? Or was it as per the management's earlier expectations? Or was there some seasonality over here? That's the first question. The second question was you'll be growing full year anywhere between 27 and 28%. If you could just split what will be the organic growth contribution and the inorganic growth as part of this. A related question, Theory, with regards to this is, how do we really see growth for FY23? I'm not asking for any numbers here, but with all the initiatives you've undertaken as of now, would it be fair to assume or base our calculations that at least the organic growth in FY23 would be at par with what Wipro is doing in this year end? Sort of just one question. The attrition rates have gone high. It's gone up. And attrition continues to be a little bit of an elevated challenge for almost all IT service companies. In the last 4 quarters, almost 80,000, your company has seen almost 80,000 new employees coming into the company, which translates to almost about a third of your employees with less than 12 months of experience. How much of it is a challenge for a company like Wipro, that new employees coming into the company, do they really understand the Wipro culture? What measures you are taking, if at all, that Wipro continues to be an employer of choice and employees continue to remain with the company? That's all from my end. Thank you.
I have a number of questions, Varun. Instead of one, you had 4 questions. But Thierry, please go ahead.
I was going to say, Varun, thank you. I counted a little more than 2 questions, but we'll try to cover all of them, okay? So the first one is on the growth for the quarter. You ask about 2.3%. It's 3% constant currency term. It's right in the middle of our guidance to 2 to 4. So frankly, you ask if it was a surprise. It's in the middle of our guidance. We could not be more satisfied with this performance for the quarter at 3%. And frankly, if you reflect on the 2 to 4% guidance, this is a reflection of the trend. That's the level we've been guided to for the last several quarters already, and that's the level where we feel comfortable seeing the demand and the performance on the sales side. You ask the impact of M&A. We are not necessarily disclosing M&A impact, but I think you have all the elements of basically Capco and so on the 27-28% year on year from Wipro. Organic growth for fiscal year 23, or actually growth for fiscal year 23. As you know, also, we get this question all the time. We guide for the coming quarter. So I will stick to the rule or to our, methodology. But what I can say is that we are not seeing fundamental change in the market. The market continues to be very strong. Otherwise, we would have not had such a strong quarter in bookings. And so from our standpoint, that's why we continue to communicate and guide on 2 to 4% growth for the next quarter. That's our current pace.
I'll take it forward, Thierry. Yeah, the last question. So, Varun, you're right. It's heightened attrition across the industry. There is a big gap between supply and demand. There's a supply deficit, as you know. And as Thierry alluded to in his speech, that we had anticipated that it'll take a few quarters more for us to bring it under control. We seem to looking at things stabilizing, and the rate of growth has come down significantly of attrition, and we believe in Q4 will get moderated. So that's one. Having said that, it is at heightened levels and it is an area of concern. We would have loved, as we had started in beginning of Q3, to open our offices and have a hybrid work and people could come together, because as you rightly said, cultures get created when people come together, and given the circumstances, it is not possible right now. But we are working very, very closely on this issue, because this is the future of work. This is how hybrid work will happen. How do we stay connected? We are making big investments. We are making investments in looking at driving employee experience, employee engagement. In fact, senior leaders are joining to just drive that as an agenda for the company, because that's what's going to impact us in the future. And the talent war, if it is won, we'll win the war in terms of the market. So we're very focused on this, and we are very confident that supply will never be a constraint to manage our demand. We have seen that last 3 quarters, we have added 10,000 people each every quarter, and we seem very confident moving forward.
Swati, I request you to unmute yourself, introduce yourself, and ask your question.
Hi, Thierry and others. I just have like a couple of questions. One is, I wanted to get more clarity on what you asked about the 2.3% growth you had witnessed. So if you look at the growth, Wipro had been growing at 6.9% in the last quarter, and the previous quarter at 12.2%. And so if you can, I know December is a seasonally weak quarter, but can you throw a little more light on the decline in momentum the Wipro is seeing? Are there any particular factors that impacted it? That is one to three. And if you can also share the total ACV value, which you had said had increased by 27%, if you can share the value. I have questions to Saurabh too, but once Thierry asked, I just have one question for Saurabh.
Swati, I'll take the first question, but the second one, I don't think I understood. Sorry, the line is not perfect. I didn't really hear what you said.
The total annual contract value, if you can share the annual contract value, which you had said it has increased 27% year to date.
What?
Yeah, absolutely. So on that one, total annual contract value, 2.85 billion for the quarter. Performance. So again on the momentum, I mean, for sure, for the last few quarters we've guided 2 to 4. It means sometimes you can go a little up, a little down, but we have a range, and that's how we are guiding. Here we are right in the middle of the range. It's true that, in quarter 3, you have furloughs, you possibly have less working days, but it doesn't matter. The reality is that we have the same level we have the same momentum, we have the same, growth. We see more or less the same response from the market, if you like. So basically for us, we don't see it as a slowdown. It's just, we're keeping the momentum of the last quarters.
Okay, and Saurabh, the hiring. So are you stepping up the hiring again in the light of the increased attrition? We are seeing 17,000 freshers is what you had shared last quarter. So are you increasing the number for FY22?
So Swati, as you know, freshers need to be planned. We are going ahead at 70% more freshers will be added in FY22 as compared to last fiscal. And for FY23, we will be going with 30,000 freshers. So it's another significant shift from what we're doing in FY22. So we continuously would be making sure our supply is not a constraint to manage the demand environment.
And also one more query on the attrition front. So I saw that Wipro had rolled out ESOPs, a restricted stock unit for employees. Is this a effort to retain the employees? Could you share more on the efforts Wipro is taking to retain the employees?
Swati, the stock units, the equity which we share is for senior leadership. It is done annually, so it's nothing which is out of cycle. It's planned every year in December, and that was done in the quarter. So that's as per plan.
More efforts you're doing, maybe the wage hikes. Can you talk about?
We have done, as I said, we have done. Just to give you 3 data points, and I know we'll give you quickly. Apart from everything, as I said, there is a supply deficit from a demand environment. There's a gap there, but we are doing whatever it takes. We have had a second round of salary increases for 80% of our employee base in this current quarter. We have done 3 rounds of promotions for 80% of our employees in the last 12 months. So every 4 months, we have actually given promotions. We're creating opportunities because we could do it, because we are growing fast. There are opportunities for people to grow. So we're making sure we are able to do that. We're continuously investing in on freshers and upskilling. We're able to try to move people to areas which they want to work in. So there are a plethora of things which we are working towards to make sure, and that's why the outcome of that is you're seeing is that as we feel more confident of a much more moderated attrition in the coming quarter. Thank you, Swati.
Sajid, please introduce yourself and proceed with your question.
Yeah, hi. Good evening, gentlemen. Sajid here from Bloomberg Wind. Just want to get a color of the TCV growth, which we are seeing. If I'm wrong, Thierry mentioned that the total contract value was 2.85 billion in the third quarter. How do you see this pipeline and do you see a little bit of sluggishness coming into this pipeline going forward?
No. So 2.85 is ACV. We do not see, Sajid, any sluggishness. Actually, the performance on bookings on order books has been strong in every of our market units, in every market, in every service lines and sectors. We actually see the opposite. We see a very strong demand. Another indication, Sajid, of that is the evolution of our pipeline. And our pipeline, which are deals that we should be able to close over the next quarters, is the strongest it's ever been. And finally, our win rate is improving, as I said, versus what we had in the past. So more pipeline, a better win rate should continue to sustain, nice performance on bookings.
And do you see pressure going forward with respect to supply side? You are hiring a lot in Q4 and FY23, but wage cost, do you see that going up as going forward? Is that going to be? Is there going to be more pressure on the margins, and will that require you to do further wage hikes as you go into Q4 and subsequent quarters?
So there's several points in your question, Sajid. The first one is, is there a pressure on the supply side? I think it's clear. Yes, there is one in the market today, obviously, between attrition and the fast growth. By definition, we are hiring a lot of people, and so there's a certain high activity in that space. Is there a would it help if there was, lower attrition? Definitely yes, and that's why, we're welcoming the fact that, attrition will moderate in Q4, and the fact also that we feel we have, a better grip on this attrition. Is there pressure on the cost side? I mean, it's clear that, hiring lateral is usually more expensive. But we are doing a lot of activities, and we have onboarded a lot of freshers, 70% more than last year. I can't even tell you how much more versus 2 years ago. But I think it's a way to balance. So net, I think we should be able to maintain, and therefore, the feeling that we can sustain our margins as well.
Okay, thank you.
You're welcome.
Kushal, please unmute yourself and proceed with your question. Kushal, please introduce yourself and go ahead with your question.
Yeah, we can move to the next person. Kushal is not there.
Sure. Uma Kannan, you can introduce yourself and proceed with your question.
Yeah. Hello. Good evening. I'm
Hello.
Uma from the New Indian Express. I have a couple of questions. Like I could see your top markets have performed very well in this quarter compared to last quarter. So, like, what are your plans for these markets in the coming quarter as well as in FY23? Also, in terms of total deal value, what are your plans going forward, and what can we expect in terms of the deal trends?
So the first question, if I understood well, was on the market, on the growth in the markets, right?
Correct.
Okay, understood. Okay, so what should we expect? Americas will continue to grow solidly, Kushal. The Europe is, growing and will continue to drive growth. In Europe, we see growth in every market. And in Asia Pac, we have been growing well as well. Some markets like Middle East where we hadn't grown and we are starting to grow again. So from a geographical standpoint, I would say, and Latin America is a growth area for us as well. So all these markets are growing. If I'm looking at sectors now, I would say, definitely banking and insurance are growing. Energy and utilities will resume growth and will accelerate. Manufacturing is doing well. There's clearly a recovery of the manufacturing sector post, first waves of the pandemic, and we see growth as well in healthcare and in consumer. So across sectors as well, frankly. The second point I missed that. Sorry.
So what can we expect in terms of the deal trends in the coming quarter as well as in FY23? What kind of deal trends that we can expect?
Hey, Stephanie, you want to take that one?
Sure. Thanks, Uma. We see a very robust pipeline of deals of all sizes. So large deals, some mega deals, as well as Thierry mentioned earlier, medium and small size deals. And we think that trend will continue to have a healthy mix. You'll see that, we're focused on the market and driving value with digital transformation and cloud transformation. And we continue to invest heavily in our teams that are out in the markets with our clients and with our capabilities, and doing that with our partners. So I think we'll continue to have a robust pipeline. I think it'll represent all types of deals. And I think the value that we'll deliver in our solutions will help us achieve, better pricing in certain instances as well, where clients are looking for more value and scarce talent. So we're very excited about the pipeline and the prospects for Q4 and next year.
Thank you. Thank you.
Ramita, please unmute yourself, identify yourself, and proceed with your question.
Hi, hello. So my query again, a follow-up to the last query would be, since you mentioned that pricing is improving, can you give us some color in terms of what offerings or what areas within your portfolio have been able to kind of basically for which clients are kind of open to increasing to better pricing? And also a question for Saurabh would be, in terms of attrition, where exactly is the leakage happening? Like, we have talked about all the measures that are being put into place, but what area, what set of employees, is there any, has that been identified where, where we can plug the leakage basically? So yeah, these two queries. Thank you.
Romit.
Yeah,
Yeah, Romit, I'll go ahead with the first one. So I think we are definitely seeing a slight positive, I would say, step on pricing, and that is reflected by both factors. The first is the kind of work that we are doing, the kind of value we are delivering to customers. So that is definitely a step up, a secular movement towards that. And the second is also regarding the sort of scarcity of certain skill sets in the marketplace, and Wipro's ability to bring on board at the right time, at the point of impact to our customers. And these two really are, I would say, the key drivers for the slight, as I said, positive step that we have seen in the pricing in last few months.
And to your second question, on where are we seeing the pockets? The pockets are in high growth areas. So if I look at on data, on cloud, on practices like Salesforce, and some engineering, these are the areas where these are high growth areas and where we are seeing attrition. And the experience where we are seeing is between 3 to 8 years is where we are seeing the maximum attrition of people in that experience bucket. So these are the two pockets which we are trying to focus on, and we are trying to see that if we can build a good pipeline of full stack trained freshers to take up this over a period of time, both from an attrition, growth, and cost perspective, it's a plus for the organization. So that's our endeavor as we move forward in the coming quarters.
Just to follow up to that, Saurabh, what part of, like you had mentioned, I think around 25,000 freshers that were planned for this year. So what share of that has already been onboarded?
We had said 17,500 would be onboarded in this fiscal. We have already onboarded 17,000. So we are looking at a very few number in the last quarter there, because the entire process gets over in the first, and we onboarded everyone. For the next year, we are looking at 30,000 plus freshers. And it's a cycle, as you know, people have to pass out and then come. So that's what we will see.
Thank you.
Sunita, please identify yourself and proceed with your question.
Hi gentlemen, my name is Sunita Nagpal. I'm from UT now. Wishing you a very happy new year. Thierry, my first question to you is that if you look at the deal wins that you had so far in this year, basically you've clocked 1.9 billion, and if I take the run rate of every quarter of roughly about 600 million, then you will be finishing the year with $2.5 billion kind of deal wins in this year. Last year we saw a substantial bump up in last 2 quarters, which was largely because of the 2 mega deals that were bagged in each of the quarter. Are the mega deals becoming more elusive in this year, or there are some in pipeline that you're hopeful that you will be bagging? That's my first question.
Yes.
I'll ask the second question after you answer it.
Okay. So it's actually a very good question. The fact that indeed exactly a year ago we are closing Metro deal, and this which was definitely a mega deal, $1 billion deal. The performance in sales this year or this quarter that has been uniquely strong, the strongest ever, actually has been done without a mega deal. So that's interesting. We haven't lost any mega deal in the quarter. We actually have some large deals or very large deals in the pipeline for Q4 and Q1 of 23. So we are very looking forward to it. There's a possibility, but I might be wrong, Sunita. More time to investigate and understand. But there's a possibility that because we are seeing it in our relationship with our clients, in some cases, some of our deals are large deals, are coming in chunks, as opposed to one just because of the necessity to drive speed and agility from the client. But, for us, we take it the same way, whether we have 3 large chunks adding up to a mega deal or, a deal signed once is the same. It's really depending on clients' expectations and way of doing things. Having said that, it's true that in our performance this quarter, there was more, what I would say, some large deals and a lot more than ever, medium-sized deals.
If I can talk about
my first question, Sunita.
Yeah, if I can follow up with the question that are you seeing inclination from the clients willing to pay more since you're facing supply side issues, and you talked about the speed is of essence. Are the clients willing to pay you a higher price if you are giving them early delivery, or however you define it?
I would say yes. We are seeing it in cases, regularly we see, because you're absolutely right. The client, often the client is not so much about, rates. It's also about, can you do it today? Are you able to respond to this expectation and, turn into execution now? And impact of transformation for our clients are such that, it's more about reliability and speed than it could be potentially about cost. And so we are seeing it. We are taking the opportunity to go back to clients and discuss with them rates when we feel that, this is what needs to be done.
Okay, and if I can ask last question, other than attrition, what is keeping you awake at the night? Any worry points or the soft spots that you see in near term that could derail the growth story?
Sunita, frankly, I tell you one thing, the really, if I had to think about something that kept me awake, I particularly reacted to the new wave of COVID, and that's why we decided to ask all our employees to stay home and not travel and not go to the office unless necessary, because I still remember what has happened in particular in India in the April to June timeframe, and I don't want to leave it again. And I don't think our clients or employees want it either.
We have just enough time for one last question.
Varun, would you like to go ahead with your question?
Hi, Thierry. If I can just ask one last question here. Thierry, Wipro has acquired a lot of companies under your watch. How do you really see the integration risk? And if I have to ask you, what if you could share, how exactly is Wipro making sure that much of the companies which it is acquiring continues to give it all the requisite benefits and there are no integration challenges? Thank you.
Yeah, Varun. So good point and good question. Thank you. I would say yes, you're right. We are doing regularly acquisitions when it makes sense, and we'll continue. It is definitely part of our strategy, and I think it's always done with a lot of, it's more strategic than opportunistic. We really want to focus and build, patiently and in an organized fashion our machine. And reinforce our position in the key areas. My view is that as we are doing more acquisition, we are getting better and better. And so, unlike people would believe that, you need to do only a few acquisitions because it's difficult. Actually, we are learning, and I'm sure my colleagues could speak about it too, that, now we have a PMI, so we have a PMI team. We have a very structured process. We have systematic reviews on multiple fronts, whether it's on the legal front, on the tax front, on the IT front, on the HR front. I think we have all these processes, but we also have now, it's a systematic part of our reviews and of our management a routine to review the integration of those entities. And I tell you one thing, I'm very satisfied with the way we've integrated those companies. We do not have more attrition in these entities that, what we see in our own business. We see that, we are able to hit and very often should deliver more than what was in our synergy plans and so on. And so I think it's just becoming more part of our DNA at Wipro.
We'll take one last question.
Shivani, would you like to go ahead with your question?
Yeah. Hi. Can you hear me?
Yes.
Yes.
Yeah, good evening, Thierry. Thierry, just a simple one question. What has been the inorganic growth rate for this quarter? If you could share that. Saurav, and a quick follow-up to the numbers that you shared. 30,000 for FY23. For FY22, if you could just reiterate the fresher hiring and also the total, lateral hirings that the company has done. That's it. Thank you.
Yeah. So, Thierry, I'll go ahead with the first one. And before I respond on inorganic, let me clarify a point on which came up earlier. We have grown 3% sequentially versus our guidance of 2 to 4%, and that is the number that we should look at, because that's the operational work that has happened. So if you are 100, you become 103. Operationally, you delivered so much projects to our customers and converted so much revenue. Sometimes, because of the exchange rate movement between the previous quarter and current quarter, you would see that your revenue falls by a particular number, and that impact is also reflected in the realized revenue, which is 2.3%. Interesting is Q3 last year we had 0.6% higher, which was a gain on Forex. This quarter we have 0.7%, which is loss on Forex. But my request is to evaluate our performance, look at the constant currency number. That's true reflection of execution on the ground. Your second question on the inorganic versus organic, as Thierry alluded to in the beginning, that was part of our guidance. And as we integrate well, sometimes the revenue comes from the core entity, sometimes the revenue comes from Wipro. We see it as a single stream. The more we distinguish, the more divide we create. So after a couple of quarters, we see it one revenue stream, and that's what we have shared with you.
On freshers, 17,500 for FY22, 30,000 for FY23. Those are the numbers which we're looking at. On laterals, it is dependent on demand. I again repeat, supply side is stretched, but that will not be a constraint to manage to support the demand which we have.
Okay.
With that, we'll close the press conference. Thank you so much for joining.
Thank you very much, everyone.
Thank you very much.
Thank you.